This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This chapter goes through and deals with foreign currency. It's covered by the standard up there, IS 21. There are several little aspects that we go through and pull together. Each of those smaller aspects individually is pretty straightforward. There aren't any ridiculously complex rules to get yourself stuck into. But when we get to the exam style questions and we begin to pull everything together, it does get quite tricky. And there's a bit of an overlap, if you like, between the different sections. In terms of your ACCA P2, whereabouts are you likely to see this? Well, obviously, we're in the group accounts section of the notes. So you could get for question 1, 35 marks with regards to an overseas consolidation. But you could also be examined on IS 21 as an entire standard. And it has been seen in the past as a focus question in question number 2. So 25 marks entirely about overseas transactions, overseas subsidiaries. So let's go through, give a more detailed introduction, shall we, about what the standard actually goes through and covers. So there's nothing, if you like, in your notes. It's just there for you to go through and observe and see what we've got. So what we've got there, an odd diagram. But if you imagine the triangle to be the UK, and then the line representing the rest of Europe or the rest of the world, whatever you so wish it to be. And what we're going to focus on is we're going to look at, say, a UK company. And first of all, we're going to go through there and look at what determines the currency that those financial statements are prepared in. So we can see there that you've got the financial statements prepared in pound sterling. Why do we prepare the financial statements in pound sterling? That currency that the financial statements are prepared in is referred to as the functional currency. So why is the functional currency of that UK company the pound sterling? It is not, so that you're aware, it is not just because we are based in the UK. Okay, the likelihood being because we are in the UK, that then starts to meet those various rules, but it does not necessarily mean that because you are in a particular country, you have to go through and adopt the local currency as your functional currency, being the currency that we prepare the financial statements in. Once we've done that, we then move it on. So having looked at the functional currency, we then begin to go through and look at what happens if, say, we buy or sell goods on credit with a business overseas. So there, what we've got, it is a German company. It looks like the German company has its functional currency, is it as the euro. So if that UK company sells goods to the German company or buys goods from that German company, the invoice is likely to be denominated in euros. Now, we just have an issue from the UK company's perspective. If they have a credit purchase, they need to record that credit purchase by debiting purchases and crediting payables. But we need to translate the euros into pound sterling so that we can then record the monetary value of the transaction. We then need to go through and think about, well, we've initially recorded the transaction. How do we then subsequently record for any changes in the value of those items that have been dealt with on initial recognition? Okay, so that's referred to normally as the individual company section, because you are looking at entries that are made within an individual company set of books, i.e. the UK company and how it deals with any foreign currency transactions within its financial statements. Okay. Then what happens, the third and final bit that we'll consider, is whereby that UK company has control. So it owns greater than 50% of the voting right. So therefore it has the power to direct the activities of, here, a French company, a company that has its functional currency as the euro. As that functional currency is the euro, as that company is a subsidiary because it is controlled, what we need to go through and do there is, before we go through and consolidate the results of the overseas subsidiary with that of the parent, we'll need to look at what the group financial statements are prepared in. So here you have a UK parent company, its functional currency is the pound sterling. The likelihood is that its group accounts will be presented in pound sterling as well. That just gives us the issue with regards to the consolidation of the overseas subsidiary, because we need to do a little bit of translation of that overseas subsidiary, don't we, prior to performing any consolidation. Once we've gone through and done that, that's it. We've completed the chapter. We can go through there and prepare a set of group accounts that involve the consolidation of an overseas subsidiary. If there are any foreign currency transactions, either in the overseas subsidiary or within the parent, we can deal with those. And then there's also a discursive aspect with regards to discussing the functional currency. So the three things, just to recap, first of all, we will go through there and talk about the functional currency. So the currency that the financial statements of an individual entity are prepared in. Why is it designated as such? So why is the UK company got the functional currency as the pound sterling? We then go through there and look at transactions that are in a different currency to your functional currency. So looking at the individual company accounts and getting the transactions recorded there in your functional currency. And then thirdly, last but by no means least, we look at the consolidation of your overseas subsidiary. Again, each one in isolation isn't too technically difficult, but when we bring the three together, it can prove quite a challenge. So strap yourselves in, and I'll see you all in the next video where we look at the first two aspects, being the discussion of the functional currency and being able to go through and translate the results of, if you like, a transaction that is in a different currency to that of the functional currency within the individual accounts. So I'll see you all in a moment.